Now, the three basic things I look for in a footprint are volume, finished auction, POC placement, and as a bonus, delta imbalance. Did you know that over 80% of retail traders fail in their first year of trading? It's not because they lack passion or commitment, it's because they are missing one crucial thing: context. Footprint charts are that secret weapon for gaining that context and seeing the market movements most traders miss out on. Today, I'm revealing 3 footprint secrets that will change the way you trade forever. My name is Renko, and I know I've been missing in action for some weeks. The people who follow my Instagram will know that I have been hospitalized with quite a severe medical condition for a while, and it took some recuperation. But I'm happy to announce that I'm back, alive and kicking. Just had a new beginner course mentorship behind my back, and the Discord is back up and running at full speed. Check out the links in the description if you're interested in trading live with me on a daily basis, as well as New York as a London Open, or just start learning about market structure as a complete newbie. I'm here to help, but first, let's dive into the chart. Okay guys, so this is the problem a lot of traders face. They are flying blind. When you rely only on traditional analysis tools like candlestick patterns or RSI, even basic support and resistance, you are only seeing part of the picture. You might know where price has been, but do you understand really why price is moving that way? The biggest challenge is those methods aren't showing you what actually happens behind the scenes. What is actually happening behind the orders, where the big money is moving, and how orders are stacking up, where liquidity pockets are hiding. And without this information, you're left making decisions on incomplete data. Now, this is where order flow comes in, where the footprint comes in. And if you followed my vids before, you have already seen this chart. I use primarily 13 range footprint chart. This is my 13 range footprint chart. Why not a 1 minute or 20 minutes or 3000 ticks or 806 volume? I hear you ask. There's no magic behind it all. It's actually, it's all the same data. Every footprint chart has the same data. I have a 30-minute footprint chart. So if we go and look at these lows at, let's say, this blue line is a previous value area. So let's say we look at this line at 8 o'clock, where we burst back through into that value area. If we look at this, we actually see exactly the same movements. We actually see the same orders coming in to the market. Same kind of orders, the same volume being built up right above. It is just all the same data. It's all just displayed in a different fashion, so that it makes sense to other people in a different way. I also have a daily footprint chart. This is just so I can understand the big picture. But my favorite way to trade is the 13 range footprint chart. So what am I looking for? I look for 3 things specifically. But let's first, if you don't know what you're looking at on a footprint chart, let me give you a brief explanation. You can also watch some of my previous videos where I explain them in more depth. So on the left side, you have executed sell orders, and on the right side of a footprint chart, you have executed market buy orders. And these are the market sell orders. These are not limit orders. They are executed market orders. So they can be stops and they can be market orders for people getting into positions. So you got to take some things in consideration, such as context and delta. Now there on the bottom side, I have a summary of the delta per bar. So each box represents the total amount of volume, the total amount of delta, which is the difference between buyers and sellers, the cumulative delta over the entire day, and the delta change, like how much the delta is different to the previous bar. So these are just statistics I like to look at to help me in my decision-making process. Now, first, let's look at volume. So understanding the volume at each price level is actually pretty key. We are not looking at each price level, but we are gonna look at volume in like say a big sense. So if we have here the part where we got back into our value, our previous value zone this morning, you can see that we have some volume building up above. We have some nice volume building up above. Here again, some volume building up above, some volume building up above, and some volume building up above. Every time we dove under this value area, as you can see, we have no volume, and we have also no volume here, in which we can, per decision-making process, think we are going higher up. Let's look at this on the 30 minutes as well, so that we can have a better understanding. So you can see one thing we didn't talk about yet is delta imbalances. For me, I set them on a 3. This means that there must be 3 times as many buyers as there are sellers below. See, 6, 265, 50, 170, 24, 116. This is 3 times as many buyers as there are sellers, which displays them in a different color for me, just to know the power of us getting into this move. So the volume of this move, when we got into this value zone, we can definitely see volume displayed here above and almost no volume here. We can also see volume displaying here at this volume zone, almost no volume displaying below again. And then we will dive right into our, so we can be sure that there is a lot of volume building up right here. When price doesn't build below these volumes, we can actually see price accelerating to the upside, making some delta imbalances, which is our confirmation for an upside move into the other side of this value area. Now, next to volume, there are 2 other things I look for in the footprint chart, and that is finished auctions and POC placements. So let's look at finished auctions for a second. Let's go back to the 13 range. Finished auctions is what I look for at highs or lows. So for example, this is an unfinished auction, and here we have a finished auction. So an unfinished auction is where sellers and buyers are present at a low. We have 14 here, 10 buyers here, and a finished auction is where there's 0 buyers at the low or 0 sellers at the high. Right here we have an unfinished auction at a high. And this is very clear. We have 54 and 110. And right here we have 32 and 138. So these are unfinished auctions. Now, to me, this means I have to be careful with shorting here into this zone, and I have to have multiple confirmations before I should short here in this zone, because price tends to come back to zones where we have unfinished auctions. If we have finished auctions, it will tell me that the probability of a reversal is much higher. So when I see stuff like this, I will start looking for a reversal pattern, which can be in many forms, shapes, and sizes. Now let's talk a little more about the third thing I look for, which is a POC placement. What I like to see most is I like to see the POCs being placed below the open or above the close of a bar. I have the same one here, as you can see, which is for me a very, very obvious trigger for a long or a short. Now let's just look into this a bit more in detail. I'm just going to zoom in so you guys can see what I am talking about. Let's zoom in to the difference between these 2 candles, and let's just go ahead and see what we just talked about. So we have power coming a little bit to the downside. As you can see, previous 3 candles were going down. We opened right here in the middle where sellers tried to push us down. Price came down, so that price pushing down, and most of the traded volume occurred down below with the POC below. We shoot back up and we have a delta imbalance. We note this stacked delta imbalance, and we draw a line from there. This means buyers are getting back into control when we push into this setup is what I call a delta flip setup. There's one very important thing for the delta flip setup, and that is that we need finished auction right here. 65 0. So this is for me a signal, a definitely signal too long at these stacked imbalances. So let's look at example number 2 here, which is basically the same setup. Price is going up. We have the open. We push through. But what are the differences now? We are building volume at the top. We are having a POC, which is above the open of our bar. But here we have a unfinished auction. So I will not trust this to take a short at. Second is we don't have any stacked imbalances to the downside, which does not signal sellers taking over. So this is a move you can take, but as you will see a little later, our unfinished auction will be taken out. So your stop will be probably hit, most likely. If you have taken the delta flip right here, your stop will not have been hit and you will have rode it all the way up. So that is the difference. These are the three things I wanted you to see, which is volume, finished auction, POC placement, and let's go as a bonus because I still have a little time. As a bonus, I want to show you delta imbalance. This is where we have a shift in buying versus selling pressure, and I will show you. We will look for some good examples right here. I have one here. So in spot significant delta imbalances, it's often a sign of a strong momentum either to the up or to the downside. So what are we looking for? Again, right here, this is a move up, right? We see unfinished, we see a finished auction, 75 versus 0, which is good. We see delta taper to the upside, which means we have a lot of volume building right here. So we can think of absorption, especially because price is moving below. Now our POC is right in the same area as the open. As you can see, our POC is right here. Our open is here, so we tried to peak above. We build a lot of volume there and we come below. Now what do we see below here? We see these stacked imbalances. And as I said, this is where sellers are taking over. We cannot move past the POC and we go down. Now, if you look closely, you see that this bar, if we look down to the bar statistics, is a red bar with a green delta, which means aggressive buyers have been willing to buy up here, but have been stopped by passive sellers, because passive sellers do not show on our footprint chart. And they push the price back down. Now here we see exactly the same thing happening. We see our open volume building around our POC right here at the open of the candle. We see a finished auction, 76 contracts traded, and a retest of this POC. We also see an imbalance. It's less of a significant imbalance, but it is an imbalance nonetheless, which signals buying strength coming back in, so buyers taking over. Also, what do we see? We see a red delta right here and a green bar, which means aggressive sellers were buying in to passive buyers. which takes the price higher in the end. So that's it. What have we seen today? We have talked about volume and how it works. We have talked about finished auctions and unfinished auctions. We have talked about POC placement. And as a bonus, we have talked about delta imbalance. If you put these three things and the bonus, delta imbalance, if you put these four things together, you can start making really good trading methodologies. Now it's your turn. Have you tried footprint analysis before? Drop a comment below and share your experiences. And if you're ready to take your trading to the next level, make sure to hit that subscribe button and stay tuned for part 2 of the order flow series. Next week, we'll dive a little bit deeper into market orders with the DOM and time and sales. So you absolutely don't want to miss this one. And remember, master your mind and the markets will follow.